guys, we are here live with Eddy Perez from Equity Prime Mortgage. Equity Prime is one of our new partners here at AIME as of this year, but we've been working with Eddy for quite some time, trying to figure out how we can not only pull Equity Prime into the mix with all of our AIME members, but also getting AIME more involved with everything that's going on with the NBA. Eddy's super involved out there, so he's got some great insight into what's going on with all the legislative efforts across the board for the industry. So we're so excited to have you, Eddy. Welcome.
Thank you.
We had some slight technical challenges, but we think we got it figured out now. So I apologize for the slight delay, but hopefully that means more people were able to join.
Sure.
So first, let's get started. How is Equity Prime handling everything that's happening right now? You are the CEO over there. You see everything that's going on. You're in the trenches all the way down there with your team. How's it been, and what are you guys doing to deal with all of the volatility right now?
From an employment standpoint, luckily, Georgia hasn't done a lockdown yet. They did one yesterday where they announced that you can, if you're critically ill, which made sense, but at home office in Atlanta, we've just been doing typical what a lot of people do: social distancing, washing hands. I'm bringing in lunch every day for everybody, but
That's awesome.
literally HR at the door, only allowing a certain people in the room. I hate to say it. We've just been a little bit more aware, but the good thing is a few years ago, we started going remote from underwriting, closing, and so many functions, because that just became a huge employee benefit, especially here in Atlanta. Going decentralized allowed us to recruit the whole country and get better staff mates that really believed in the vision more. And that was more important than just having somebody to look at in Atlanta. Because what I learned, and I think one of the big misconceptions that you have in any industry, is they think because you sit out their door that they're more likely to work harder. I've come to realize that some of the hardest working people are the people at home, because they just feel appreciated. That especially a lot of single parents and things of that nature, that they view driving in and that time not only takes time away, but it costs money, and they feel like they can be more productive and more effective and less stressed.
Absolutely. I know I'm definitely a big fan of that. For those of you that don't know, I am actually headquartered in Dallas and split my time between Dallas and Philadelphia. So I'm a huge fan of getting to work from home whenever possible. It's definitely a lot easier during football season when the Cowboys are playing to be back there than it is to be in Philadelphia. So I understand. With that, I mean, I guess great timing, right? That you've got so many people that are decentralized, that allows, even if Georgia does go into a stricter lockdown, there shouldn't be any expectation about any adjustments in service levels or delays in anything that y'all are working on, right?
Well, the good thing is yesterday, the Treasury Department came out and said that our industry, financial services as a whole, has been considered critical to the economy. And it's under the Department of Homeland and Security, a statement that went out yesterday. That alone lets us not slow down, because there are certain parts of the function that still by legislative laws have not been passed, especially e-closings and things of that nature are not legal across the board, that I believe, unfortunately, it took this situation, that are now going to get done from a legislative standpoint, as well as I think we got to talk about e-notes at some point in time, because if this happens again, we shouldn't be having to skip a beaten path as long as we have certain things in place.
Gotcha. That's awesome. With that, with all those legislative updates and changes, everything that's coming out, you see so much of it so regularly. I know you were just saying before we started, the last couple of weeks, you've done nothing but live and breathe everything that's going on. Do you just give us a quick overview of what you've seen, what's coming down the pipe, and what you expect to fall into place here over the next week or so?
At some point in time, I think the biggest thing that's on everybody's mind is going to be the stimulus bill. As of right now, it still hasn't passed. That one has, unfortunately, I always tell people to make up their own mind, do their own research. There is a little bit of some bipartisan politics that are being played by both sides. That's to be natural in this given situation. However, I think we need to be Americans and just do what's right, not only just for this industry, but more importantly for the consumer. I think sometimes that is left behind, and some of the things here and there that are wanted really in the grand scheme of things aren't that important. But I understand why you don't want to get into it, because then it leads to more problems. But I do think at some point in time, it's going to get done. What part of it gets done, how much of it gets done, what's in it. But I definitely believe there's going to be relief to small to medium businesses, because I think a lot of people have been crippled. the good thing that you're hearing, and this is more of an emotional stance, and that's usually what causes the biggest thing about recessions and legislator is the emotional side that I sometimes don't believe is talked about. However, you're now hearing people say, we got to go back to work. We don't need to drive the economy off the cliff. We need to be more socially aware. I think it's now starting to get noticed that it doesn't matter if you're America, China, whoever you are, shutting to a screeching halt is not good for the people. I know that there are people that are sick. I definitely advocate for those to stay home. My mom's 83 and has beat breast cancer twice. I've told her my aunts did not go anywhere. However, I think if you've been taking care of yourself, but more importantly, I think if you wash your hands, drink a lot of water, and keep a distance, I think we can definitely ride this out, because what is thrown out there definitely is that the warmer the weather, the more it eventually kills this virus. But from legislator, I think you're seeing that. We saw a lot of relief that came out yesterday on the appraisal front. I definitely think that's very good for what's coming out, especially on the purchase market. I know a few of us were on a call yesterday that Anthony had that said we wish there had been a little bit more relief on refi. However, I get it a little bit, because refi, people are worried. However, I think we need to refinance as many people as we can right now, as long as it makes sense, not for a business sense. I think right now, with some of that's going to hurt the economy, because we're going to enter in a recession from this. It's pretty much a foregone conclusion. This is going to be a stimulus that's very, very good to the consumer, to the people. So what I view as a huge opportunity, having survived the crash, is we sit in a very good position. The NBA has done a lot of great things. A lot of great people have come forward, not just in the NBA, but all over the industry, because it was only 12 years ago that we were viewed very, very poorly. And now we have the chance of becoming, it's crazy. We have the chance to go from, as I said, Freddy Krueger, being basically a child killer, to now being viewed as heroes of Batman, because we can save money. We can lower the payments. We can do a lot of things for our consumers. So that came on the front. I don't know when it's going to come out, but I'm pretty sure there's going to be relief on the Ginnie Mae front if you're a Ginnie Mae servicer, because you have to front the payments when people don't make payments. Yep. So I think there's definitely going to be some relief that goes out there. And
that's a big thing for you guys, right? One of your specialties is in that credit bucket that really leans more towards the Ginnie side of things. So yep. What are y'all doing to prepare, hoping that there is relief coming, but on the off chance that it takes a little bit longer than you'd like to see? Are there any things that people should be concerned about that are currently serving borrowers that fall into that category?
I mean, you've seen some people pull out a non-QM and things of that nature. However, I actually see more people going to rush in, because the market now goes back to essentially about 2009, where jumbo has gone to the sidelines really, really quickly. It'll probably get picked up by wealth management. And, the bigger jumbos anyway get picked up by wealth management anyway. So I think you see more people go into the Fannie, Freddie, and Ginnie Mae products. So I don't see really a reduction in that. I don't see huge overlays coming, because I think we have attacked this situation, and with the right stimulus that comes in, I know it's something that we've chatted about already, but I don't see the unemployment rate going to 20%. I do see a short-term spike, but you've already seen from Amazon to CVS to other stores talk about they're going to hire 50, 100, 200,000 people. I think in any unfortunate situation, other people come out ahead, and those are the people that are going to lead the hiring and possibly make up. But I do believe some normalcy, especially the restaurant, the travel, start coming back into play as soon as more and more information comes out.
Yeah, absolutely. And we're seeing that the environment changes so rapidly every single day, right? One day everything's great, the next day it's terrible, and the next day it's stabling out again. So take this all, for everybody who's watching, with a grain of salt. In a couple of days, we could be seeing a very different tune. Hopefully not. I love the mindset and the mentality in saying that, we are going to see a spike. It is going to happen over the next few weeks, but then hopefully the curve does flatten, right? Isn't that the thing that's going around right now, is how to flatten the curve? So from Equity Prime's perspective, and really more from yours, right, what are some ways that brokers can be positioning themselves to be successful through all of the destabilization that we're starting to, or have really experienced the last couple of weeks, and likely will for a few more? What can they be doing right now to make sure that they're serving borrowers, specifically those that do fall under that 650 credit band, who may be a little bit more at for gaps in employment coming out of this market?
The key to anything is documentation. You can have the toughest loan in the game. And as long as you document it good and it's packaged well and you haven't left any quote unquote unknowns, that's just the side of being a good originator. And I was an originator and I'll always be an originator at heart. It's really just getting down to the basics. You know, when it comes to your first time home buyer, a lot of those Govy loans, you know, the veterans, it's really just asking the questions and just really in a non-judgmental way, trying to get to them to realize that you're really their advocate. So as an originator, I just say that people dig in, ask the questions. And I do believe if somebody has a short-term furlough or some of those natures, it's not going to be scrutinized as bad as it was after 08, because 08 was a complete, I don't know what term you want to use, catastrophe, meltdown, but it really was a lot of things that came into play. First, the old myth that real estate can't go down. Also, that underwriting standards don't matter because real estate never goes down. Well, it came to realize real estate can go down and underwriting standards do matter. And underwriting standards have still been very tight and tough over the last few years. So even in a downturn, I think it's going to be better received. However, I don't see a systematic downturn. I definitely see from the projections, Q2 will probably have a real psychological effect because it looks like 5 to 10% GDP will go down for the quarter. Some people are suggesting 20, 30%. I just think that America bounces back. I mean, we're only 2 weeks into this 15 lockdown and you already have people, I'm going to say quietly boycotting it and wanting to go back to work and wanting to do things, as well as people are learning other ways to make revenue. So I just think that people are very resilient, especially Americans. I think they'll keep doing it, and I know we went a little bit off subject, my apologies, but I think as an originator, they just got to document it better and they just got to stay on it, as well as some of their customers that they currently have. I'm not saying don't go into whatever forbearance or whatever the official plan is once it gets rolled out. However, I think people need to understand that it's not a free lunch. It comes with, it can affect your credit. There will be some stigmas that come with it. So if you can afford it, definitely do what you can is what I will tell you to make those payments. But I think we sit in as a wonderful opportunity to refinance a lot of people, and also in their purchases, definitely get them in the houses of their dreams, probably for a lot less money. So I think we have a great chance of coming out from the villain to the hero in this equation.
Definitely. And that seems to be a theme that we hear resonating across the board, that it might not be today, but it definitely could be in a week or 2 weeks or in a month for a lot of the consumers that people are talking to. Maybe rates don't make sense right now, but they will. And we know that they will. It's just at what time. So to your point, getting as much documentation as you can now, keeping it up to date, checking back in every week or every couple of weeks to see how things are going, letting your consumers know what's happening in the market, and being that person that gives that information to them is only going to build that relationship even more, right? And that's what's going to allow us to come out of this a lot more effectively.
Yeah, I mean, it's still a relationship game. Everything in life is still a relationship game. And I think keeping that relationship and even if some of the information isn't the best right now, just keeping that transparency and that open dialogue is definitely going to serve very well. I would even say in the short run. But we got to see how the market plays out, because it really depends on the stimulus, like we talked about from the legislature, depending what goes on the market. I know that the Fed said that it's going to buy unlimited to solve a lot of the issues, but we still have to see what happens in the servicing market. That's one thing about price, because a lot of servicing values after this, dropped dramatically. We just don't know how that's going to happen yet and what servicing values are going to be. So that's still kind of a play it out how it is.
Got it. And that's so servicing values are something that people need to keep their eye on. To your point, not directly impacted by what the Fed is doing right now. What are some things that originators that maybe aren't as familiar with the secondary market or with the servicing market can keep their eyes on to get a better gauge on how that's going and what's happening?
To keep a pretty fair gauge on the secondary market is if they just look up bonds. They look up and what I mean by that is the mortgage-backed securities, that they look up the 2.5 coupon, the 3 coupon, and the 3.5 coupon. What a lot of people don't understand is the 3 coupon was paying better than the 3.5 yesterday. So people wondering why higher on the rate sheet, all of a sudden the rates were getting worse. And that's really because of it. And that really is the biggest part of pricing, is what is going on the MBS. And then servicing is just valued depending on the company. That really, there's a model that you can follow. And as an institute that has servicing on its book, you can go conservative and value at a certain number. Some people will value it more. Some people will trade it a certain way. Some people will hedge it. That really is more on a company philosophy. You know, there's not really a whole lot outside of certain factors that you should follow it as.
So in that case, you just got to keep checking into our Facebook Lives, and we'll keep bringing on people like Eddy to give you an update on where things are.
Barry does a good job with that. Barry does an amazing job really highlighting it, and more importantly, putting it, as they say, talk to me like I'm a third grader. Not to insult somebody, but somebody that doesn't understand it at that high level. How can I make it not only easy for you to understand and explain, but you can explain it to the consumer?
Exactly.
Because there's still some confusion that goes out there.
Absolutely. It's one thing to understand it yourself, but then to be able to teach it and share it with other people it's a whole nother skill set for sure. We had Barry on earlier today, and even still, I've heard him so many times now, and I'm still trying to follow step by step everything that he was explaining. So I definitely understand that side of it.
Yeah.
We've got just a couple minutes left before we get wrapped up, but I want to hit you with one more. Just going into the next month or the next couple of months, what is something that you want people to know about equity prime? What you guys are doing, how you're responding to the market, where you think you can be really valuable for our community? As a side note, we've had more referrals sent to equity prime in the last couple of months than any of our other partners. So clearly people are responding to your message and the consumers that you're trying to serve. What would you tell those people that maybe aren't as familiar with you yet?
Just to give a highlight, we're just a firm that was built by a bunch of originators, and it was originators that did a lot of first-time home buyer, did the south side of Atlanta. So we've done a lot in different underserved markets, communities, minorities. We just understand a lot of how this gig economy works today with different incomes and what that means. So it's nothing crazy. It's just we were built all, essentially everybody in this position at some point in time was an originator, or they have the originator mindset, which means, hey, pick up the phone, make some phone calls, add some clarity. And I think that's really what has separated us as an organization. And call it for what it is. We're still relatively younger, so we definitely understand a lot of the markets better. Most of the execs here are anywhere from, and management and leaders are anywhere from 30s to 40s. We have a couple in the 50s, but we even have plenty of originators in their 20s and 30s, and we have one of the younger origination staffs that does stuff. So it's just, we understand what's going on. We stay very plugged in. I'm definitely very involved, not just from a legislative standpoint, but really keeping my ear as low as I can to the ground to definitely hear what's going on. But we definitely appreciate everybody out there. And I think one thing that we're not scared to do is if something's gone wrong, we're very open-minded to talk about what happened and where the breakdown was and how do we fix it going forward. There's going to be mistakes that people make. And I've never been scared to admit the scars, because that really admits that we made our challenges and we've grown as individuals. Some people don't like to hear that, but I think as feedback, as gifts, that can only make you better, because if the person didn't care, they wouldn't tell you. So them telling you, even though sometimes they may not say it in the best of ways, but you can be a leader and get over it. I hate to say it, and just see what their motive is, because deep down they may have an anxiety or a fear that loan's not going to close. You're going to hurt their relationship. I think that level of empathy is something that we talk about here, and we definitely try to enforce every day.
Absolutely. Service levels are the most consistent feedback that we get directly at AIME when we're talking to members that are trying out equity prime for the first time. They're the first ones to say, hey, even if it wasn't perfect, they were willing to listen. They understood where I was coming from. They fixed it immediately. And then I didn't have to worry about that being an issue moving forward. So huge testament to you and your team. We are so happy and so lucky to have partners like you with AIME. And I'm definitely very fortunate to have gotten to know you over the last few months. So Eddy,
likewise,
thank you so much for joining us.
My pleasure.
The camera figured out a little sooner.
Next time we're actually going to get on at 3:45 like we were supposed to, and get it figured out by 4 o'clock. But definitely everybody that's out there, thank you so much. Appreciate it. any feedback, I just think it's, what's good for consumers is good for the overall industry. And that's how we always have to look at it. And if you look at it that way, everything will work out well.
Absolutely. If anybody wants to get connected with Eddy and the rest of the team at Equity Prime, email us partnerships@aimegroup.com. We're more than happy to connect you with Eddy and Ken Jones, the AE that everybody knows over there now, who's dedicated to working only with AIME.
Yep.
Again, everybody will be back for more Facebook Live tomorrow.
Thank you.